Hey guys, I hope you're doing well. So in this short recording, I wanted to show you how you can use the PAT session map in order to trade or to find setups during London. So let me just quickly give you an overview. So what you can see here. Oh, where's my OBS going? There you go. Okay. What you can see here is we started London. We had a bearish draw on liquidity here. We've created relative equal lows in terms of sell-side engineering. And then we didn't use run window 1 and run window 2 to actually trade to the, we traded to the drawn liquidity, but we didn't trade through it. We had potential runs towards the draw, so that is okay. But we didn't got that huge run, which you can see here. That happened later after we created some buy side liquidity around 4 o'clock, and then we purged the buy side and then delivered quite aggressively through the drawn liquidity into the safe level, into the next level, into the typical level, and now into the stretch level. So for me, in this scenario, I read it in a way that the market, if we didn't took a trade yet, that for this session, the typical expansion after the draw is hit is at that level. So if it even hits stretch, that means it expanded much larger or much further than it would typically do. That means, I don't want to say those retail terms, but hopefully it helps you to understand it. It's something like it's oversold, you know. It's very it expanded quite a lot and it's pretty much in discount. So now I want to find setups because I know that this is statistically quite rare to go to the stretch level. That means it is more likely to start a retracement, and I don't want to capture a hero trade going all the way back to the drawn liquidity. I just want to find a small little setup to end with potentially 450, which starts the last macro here in the London session, to potentially capture a small trade. So if you're more familiar with ICT concepts, you can utilize a daily chart to derive potential levels where you can determine the terminus of that movement. So what I would do here is I'm just showing you that. You see that daily chart here, the gray box, this is the 20-day lookback range. So we are quad grading those, the 20-day lookback range. The current day is not part of the lookbacks because it's still printing. We don't know if it maybe extends the range or not, so we don't count the current day, we count the last 20. And then we use the quadrants. This is the high, this is the low, and then we have the lower quad. We have basically equilibrium, and we have the upper quad. We use those quadrants to look for PD arrays on the daily chart, which help us to determine levels. So the rule is basically if a PD array is crossing one of those quadrants, it is of more value, of more importance than an random level, which is somewhere else. So I see that huge discount wick here. You see that? It defines the low of the 20-day lookback range, and it also crosses the lower quadrant. Alternatively, you could look at the order block here, but for me, it's going to be the discount wick. So I'm going to quad grade the discount wick. And you can see we pretty much hit consequent encroachment here. Let me just use a different, different style, muted quad grading. There you go. And then we can just sync it in layout so we have it in a minute chart. That is the level which I was looking at after we continued towards the stretch. We hit that. So now I can go into the 15-second structure and see if I can somehow get into that, maybe via inversion fair value gap or something like that. You see we have those consecutive down close candles which are touching the consequent encroachment level that qualifies it first of all as an order block which could be potentially important. We are then looking for a displacement fair value gap, which should have occurred here, doesn't. We have a small one here. We don't have an inversion fair value gap. So for me, it's now, I'm aiming for those relative equal highs. So back to the stretch level. And then it's now time to just see if we can maybe get something on the propulsion block here. So I'm just use that tick back. We take the stop below mean threshold. And then we take the take profit level a little bit lower than the stretch level. And then we are jumping back into the 1 minute chart to see if that cascades through. So the change in state of delivery is already reached. You can see that we have the opening price of that order block. We traded through it. So that's the change in state of delivery. The structure shift would be the moment we close above that small little short-term high. So that is something which I'm looking for in terms of seeing that from the 15-second chart, the buy program unfolds into the higher time frames. For me, that time frame here is totally fine, the 1 minute. I don't need to go beyond that. There's always a risk that we are getting stopped out, but that's okay. For me, this is like a setup which makes absolute sense. We stretched far away, we hit a higher time frame level, and we have a macro just in front of us, which can be used as a run for liquidity, or even here, if you see those inefficiencies, we have unmitigated fair value gaps here, which could be used in order to go or to run for that inefficiencies and the small liquidity pools. And yeah, so that's basically what I'm looking for. One thing which you can also do, sort of an orientation. You see that we created this high and then we ran the entire way to consequent encroachment of the daily discount wick. So that could be something which you perceive as a dealing range. And usually what you want to do is, if you are trading within the dealing range, you don't want to overstretch the target towards premium. You can trade from discount to premium, obviously, if you know what you do. It's also recommended to trade from discount to premium, don't get me wrong. But if you are on the safer side, you can, for example, use that dealing range template, and then we have, where is it? Discount premium. So we are aiming around about that level. That should be everything which is lower than equilibrium is something which I perceive as easy to reach. The moment we go into premium, if this is an, let's say, bigger sell program, the moment we are entering into premium, the probability of a continuation, or basically from here on and a reversal lower, starts to increase. So for me, all of those shots entering in discount, exiting in discount are on the safer side. And I don't need to, maybe that's just my personal taste, but I don't need to have those big home run trades. I rather have a lot of small winners, which adds up over time. So yeah, that's basically what we're doing here. And let's see if we can get this delivered in the next minute and the macro starts. And I usually don't aim for the highs and try to go, because ICT is mentioning, you know, trade to the level and through the level. But for me, this is a more defensive trade. So I'm actually trying to get out a little bit prior to the actual, the stops which are placed there. So on the 1 minute structure, just to continue the analysis, we see that we successfully had to change the state of delivery, which makes this a qualified order block. We are missing the, not first position, but we are missing the fair value gap here. Usually if you want to have a high probability order block, you want to pair it with a fair value gap. This is all in ICT's teaching on the order block. And it's very interesting because, I mean, if you listen to Michael for quite some time, the order block is always like a moving definition. There there's just one occurrence where he properly, I would say, defined the order block, and it's not in core content month 4. So that is a huge misconception in my opinion, because core content month 4 gives you the very, let's say, let me correct myself. It is the core definition. It was the first instance where ICT defined the order block. But in 2022, 23, 24, and 25, and even 26, but I don't think in 26 he did not talk much about the order blocks. But over time, he basically added and corrected the definition. And the most recent definition is a definition which is quite difficult to actually understand, because it is not an order block in terms of there were orders here, so that, I mean, if you watch the core content, the order block, how it's explained is that basically smart money or the algorithm is underwater. So if they are pushing into a liquidity level and then the algorithm is going to reprice higher, that puts basically the smart money traders, which are still trying to get which are still in the short position, trying to get out in the sell side liquidity. Not everybody can get out because of liquidity issues, and then the very quick repricing higher puts them underwater, and then the algorithm mitigates the risk and sort of offers the opportunity for the smart money traders to mitigate their underwater or negative contracts. That means there is selling taking place, and also they can then buy back. So this creates or explains this sort of very springboard-like reaction on those order blocks. This is the 2016 core content for month 4 definition, or basically explanation. Obviously, we all know that the amount of orders and all of that doesn't really count. It doesn't really make anything go. So from that standpoint, what I wanted to say, from that standpoint, he added more to the definition, and it's not a block of orders. It is a block of time. That is the most, I would say, confusing part. I mean, I know time is more important than price. Everything there, it's clear. But he mentioned that it's a block of time. It's not a block of orders. And it's not orders in terms of positions or contracts or something. It is more like an order, like a command. You know, it's like if somebody in the military orders you to do something. And the order block is a block in time. Once the opening price is traded through, doesn't need to close through. Once it's traded through, that opening price orders, commands the algorithm to perform the change in state of delivery. That's an interesting definition. I can look it up. Maybe I can put it into the comments so that you can hear it from yourself. But this is sort of what he mentioned. This is actually the true meaning, true definition of an order block. It's a block of time. The moment the opening price is crossed, it orders the algorithm to change the state in delivery. And this is what we're utilizing here. In order to find a good one, we paired it with a higher time frame level, consequent encroachment, and we utilized the rate map to see, okay, draw already reached, and then we expanded towards the stretch, which gives us a good idea about that we are quite far away, so pretty big in discount. Then we jumped in the 15-second chart, tried to get into a propulsion block to capitalize on that. So here I'm going to just secure my position, although it's demo trading, obviously, demo balling like ICT. Yeah, okay. Can already see the comments. Again, this is just an explanation video, so I'm not claiming to be the richest prop firm trader on the planet, nor I'm claiming that I have Enigma or something like that. I'm just trying to make sense out of the amount of information we've got from Michael. So here I've just secured the order that because we are approaching we are the position, and we are approaching end of the London session, and afterwards we are entering a 2-hour window of a nothing land. So need to be careful here. What I'm watching now is that premium wick. You know, do you see that? You can see the premium wick. Oh no, let's use a different tool. That makes more sense. So, you see the premium wick, consequent encroachment of that. That tells me if we are able to reach it or if you're able to cross it with a closure. That tells me that this fair value gap, for example, which is here, we have a portion which is not mitigated yet, which is this one, that this is likely to reach. So I want to see in the next 2 minutes basically that we touch that consequent encroachment level. If we can do that, I'm quite confident that we even are capable to reach up into this level, sort of like a ladder telling me, okay, this is possible, and then we can go to here, and then we are monitoring consequent encroachment to see if that also takes place. So safest option would be to put the take profit slightly below it. So because if we are not able to reach it, I'm not interested anymore. So that's basically the trade already done here. And let's see if we are just kissing that level goodbye, and then maybe the continuation lower goes or happens. So that's basically also a demonstration how I used it in this particular case. Not necessarily trying to get a short in that direction. Obviously, you could have looked at something in this direction, but it wouldn't. If you I mean, it was yellow at the beginning, so if you try to get to it and through it, it would have punished you, which is okay. I mean, and that happens. You cannot completely avoid it. But yeah, then we saw that movement. We completely crushed through drawn liquidity. I wasn't part of that, as you can see. But then I just switched basically the stance and said, okay, how far can it reach? If it comes to the stretch area, then I'm actually interested in maybe getting a short retracement, because it is quite close, quite far away and pretty much into discount. Then I went to the daily chart very mechanically, just trying to get a higher time frame point of interest level by quad grading the up to 20-day lookback range, selecting the discount wick, which is quite prominent here. If you looked at discount and premium wicks and those PD arrays for some time, it will jump into your eye quite directly. And then we used this one to define the point of interest, which we did. And then we could have turtle soup that, but I'm not a turtle soup trader. And we looked for confirmation on the 15-second chart. We stayed humble. It was a good run. I'm not saying anything else. I'm also not saying that this is going to crush now. It could be the smart money reversal, which then goes into, you have the initial consolidation here. You have one stage basically pushing it down. It could be a market maker buy model, but I don't expect it to finish. If it is unfolding, I would rather expect it to terminate on optimal trade entry. So if you didn't watch the charter content, ICT's charter content, where he introduced 12 or 13 models, and then you have the universal trading model, and here he is talking about that the market maker buy model and sell models, they don't need to finish in original consolidation. That's the wrong expectation if you want to trade them. Sometimes you will find good market maker buy models, but they will terminate in around about optimal trade entry. So that is something which, because from the daily bias standpoint, we are difficult now. I'm not saying that it's easy, because we are in consolidating markets in this range, basically the dealing range from here to here. We saw some confirmations that the price could go lower, but then we also had a change in state of delivery again, and then another change in state of delivery again. So it is sort of fooling you on the daily chart. So that's the reason why I've receded to focusing on session bias for that time. The moment we are actually seeing a more clear signal in which direction it can go, then the daily chart, I think, will clear up. We have some relative equal highs here. So they are prime targets. And then we would enter back into the all-time high protocol. And you have the next institutional, or let's say big figure levels here. So we are quad grading from 31,000 to 32. And then we have the 250 point steps. That is a quite good measure to understand if we are penetrating the all-time highs, like what could be the next drawn liquidity. So yeah, but at the moment, daily chart is quite difficult to make sense out of it. I'm not claiming that I can do it in each regime, but for me, this consolidation is quite difficult. So I'm basically just looking to get something done here in the sessions. Okay, I hope that was useful. Let me know if you have further questions in the comments. And yeah, then I'm also trying to get some more videos recorded so that you can understand how to use the rate map. If you like that, two things you can do. Either you can just check it out. It should be also in the comments or in the description. There's a 7 days trial. Just test run it. It's no big deal. And also no bad feelings if you don't want to pay for it. You can go through the presentation there. I shared a lot of statistics with you there, so you can develop a good understanding. And yeah, if you want to support in any way, shape or form, just hit the like button and subscribe. That would be a huge favor and from you. And I promise to deliver good videos on that indicator and maybe on other stuff too. So then take care. Bye-bye.